This is how I traded and analyzed the market on June 2nd according to my Fibonacci system. Okay, I first started analyzing what happened the pre-market. I first drew this fib, but as you can see, price was very choppy inside this fib. Broke through the 76.4, then it came back up, came back down. So I chose this high point, or this pivot high, because the market had shown much more determination and direction here. Okay, so as the market opened, price opened below the 50% level. Now this was something I did not mention in my videos from yesterday, but in this case, as you can see, the distance between the 50% level and the 76.4% level is 2 points. So by my rules, I will not be trading this. However, since it is the first trade of the day and the market opened below the 50% level, I took an entry at the 50% level. Therefore my stop was exactly 8 ticks, or 2 points. I did not front run this level because price was not coming or price did not open above the 50% level, so I did not have to fade this level. Instead, I just placed an order here because the market was coming from below the level. Okay, so I took this trade. My target was eventually hit, so I took a 7 tick profit there. Afterwards, price started falling. As you can see, it went through the 76.4% level, so that means I changed the direction on the fib. So I draw from this high to where it broke, which was there. As you can see, price then went through the negative 23.6% level and retraced back to 0. So I would be moving my 0% line all the way over here, and in doing so I see that price has extended too much, or the distance between the pivots is too much, so I would not be taking any trades. Now, like I said yesterday, if you want, you can move the pivot high you were using in this case to the following pivot high, which would be here, so it would still be within the range of a valid distance between pivots to trade. However, price did not retrace to the 50% level and continued moving down. So as you can see, moved to the negative 23.6 level, back to 0. So I would move the pivot low, or the 0% line, to there. Okay, still this is not tradable. The distance between the two is more than 2 points. Okay, then we can see, okay, right here price broke through the 76.4% level, so I would be drawing a new fib in the opposite direction as such. Okay, as you can see here, the distance between the entry, or the 50% level, and where the stop would be, is 8 ticks. So again, I would not be looking to trade this level. Price retraced, went through the 0% line, back to the 23.6. So I would move my line here. Okay, it retraced to where our entry would have been, except I was not trading because of the distance between these two. Okay, price then went up above the 0% line, then retraced, so I drew another fib from this pivot to this pivot. However, when I drew it, I noticed something that I forgot to mention yesterday in the videos, which is that As you can see here, the distance between the 50% level and 76.4% level is 1.5 points, 6 ticks, and from the 50% level to the 23.6% level is 5 ticks. So if I were to enter and front run this level by a tick, then I would have a target of 4 ticks and a stop loss of 7 ticks. Now when the difference between my target and my stop is more than 2 ticks, such as in this case where it's 3 ticks, I do not take the trade because the risk to reward ratio is just not worth it in this case. Okay, so I did not take this trade here. That's something to add to the rules. As you can see, it would not have been a profitable trade. I mean, it traded at the level where the target was. I believe it traded around, I'm not sure if it was 400 or 600 contracts there, and then it fell. Okay, so it broke through the 76.4 line, so I would draw a fib in the opposite direction. Now from high to low, price retraced, did not make it to our entry level, fell to the negative 23.6 and then to the negative 50. Okay, this did not quite retrace to the 0% level, however it traded there. I mean, it traded one tick below it several times, so that's really up to you if you want to draw an extended price fib or just continue to move the 0% line. Now let's say we did draw an extended price fib. Would have drawn it from this low to our new low right there. Price did not retrace to the 50% level, went to negative 23.6, back to 0. So we move this here, then continue to fall down to negative 23.6, down to negative 50. So again, price extended one more time. We were already in an extension or an extended price fib, and so again, if you move the 0% line over here, as you can see, now the distance is 2 points. So I would not be looking to trade this fib. Continue to fall, price continue to fall, negative 23, then back here. As you can see, from here to here, price just fell without any major retracements. Okay, the retracements were short, so price was really weak. Okay, and then it was already 12 p.m. Eastern, so I stopped trading. So I just took one trade today. It was good for 7 ticks. Okay. You know, that's all the market gave me. The price movement was pretty volatile today. As you can see, moved from some 9.5 points from here to here, then retraced all the way back up, then fell again. Okay, so in this case, my rules on how to draw the fibs kept me out of the market most of the morning. I took the trade at the opening, but still, it gave me some profits. So thank you for watching.